Welcome back to our channel, where we unpack the forces shaping global markets. In this video, we dive into why stock markets don't like tariffs. As of April 2025, tariffs are making headlines, especially with recent US policies under President Trump sparking market turmoil. Let's explore why stock markets react so negatively to tariffs and what it means for investors. Stock markets thrive on stability, growth, and predictable cash flows. Tariffs, taxes on imported goods, disrupt all three, creating uncertainty that investors hate. The S&P 500, Nasdaq, and global indices like Japan's Nikkei and Europe's STOXX 600 have all taken hits since Trump's April 2nd announcement of a 10% baseline tariff on all US imports, with steeper levies like 34% on China and 20% on the EU per Reuters. The S&P 500 lost 4.8% on April 3rd, its worst day since June 2020 per Forbes. Why does this happen? It's a cascade of economic and psychological effects. First, tariffs raise costs. When the US slaps a 10% tax on imports, companies like Apple or Walmart face higher prices for goods made abroad. Think iPhones from China or clothes from Vietnam. The Tax Foundation estimates this acts like a $1.8 trillion tax on Americans, cutting imports by $900 billion in 2025. Firms either absorb these costs, shrinking profits, or pass them to consumers, raising prices. Both scenarios hurt. Lower profits tank stock prices, while higher prices curb consumer spending, slowing growth. Apple's stock fell 9% in a day, reflecting this squeeze. Second, tariffs spark retaliation. China hit back with a 34% tariff on US goods on April 4th per Reuters, targeting soy, cars, and tech. The EU is prepping levies on US products like jeans, per The Guardian, and Canada's eyeing a 25% tax on vehicles. This tit-for-tat escalates into trade wars, as seen in 2018 when US-China tariffs shaved 0.3% off global GDP, per the IMF. Companies like Boeing, down 10%, suffer as export markets shrink, dragging down stock indices. Third, tariffs choke global growth. Oxford Economics predicts Trump's tariffs could push global growth to its lowest since 2008, outside pandemic years. The World Trade Organization forecasts a 1% drop in 2025 trade volumes. Slower growth hits corporate revenues. Multinationals in the S&P 500 get 40% of sales overseas, per S&P Global. Emerging markets reliant on trade face bigger blows, with India's Sensex and Brazil's Bovespa down 3 to 5% in early April. JP Morgan now pegs a 60% recession risk by year-end, up from 40%, spurring sell-offs. Investor psychology amplifies the damage. Markets were riding high on Trump's 2024 tax cuts and deregulation promises. The S&P 500 hit records, but tariffs flipped the script, erasing 12% from its February peak. The CBOE Volatility Index, Wall Street's fear gauge, spiked to 2020 levels, per Yahoo Finance, as hedge funds dumped $40 billion in stocks for bonds and gold, which hit $3,128 an ounce. Uncertainty about tariff scope. Will Trump negotiate exemptions? Supply chains take a hit too. Tariffs disrupt global networks built on efficiency. 2018 US tariffs on Chinese goods cost firms $46 billion in extra expenses, per the National Bureau of Economic Research. Today, companies like Stellantis, which cut 900 jobs citing tariff costs per NBC News, face higher input prices and delays. This inefficiency lowers earnings forecasts, hammering stock prices. Long-term tariffs threaten stagflation, low growth with high inflation. The Federal Reserve, after its March 19th meeting, signaled steady rates, per Reuters, but rising prices from tariffs could force hikes, further pressuring stocks. Historical data show that the 1930s Smoot-Hawley tariffs, which raised US duties by 20%, deepened the Great Depression, a lesson markets fear repeating. So why don't stock markets like tariffs? They hike costs, ignite trade wars, stunt growth, spook investors, and disrupt supply chains, creating a perfect storm of uncertainty. The $5 trillion S&P 500 wipeout in April shows the stakes. Investors now face a waiting game. Will Trump scale back, or is this the new normal? Thanks for watching. If this clarified the tariff turmoil, like, subscribe, and hit that bell for more market insights. Leave a comment below with your thoughts on how you are navigating this crash. Until next time, stay informed and invest wisely.